Hey, what's going on everybody? Land Investor back with another video. This video I'm going to be recapping the shorts that I took on NASDAQ utilizing my model on the 3-minute and 30-minute time frame. And this is both going to include the candle 2 sweeps that we see occur that form a short signature, as well as how you could have approached a continuation signature if you had missed the original candle 2 sweep. So let's get into it now. So let's start off with the higher time frame by hopping on the 30-minute chart to better understand why I was bearish bias on this trade. First of all, we see we had a 3 bullish leg on the 30 minutes starting from the 7 a.m. candle up until the 8 a.m. And what do we notice exactly? Here we saw the high of the 8 o'clock candle, which was swept out by the 8:30 candle high, before we then saw a very bearish closure lower. And so here when I look for my model, especially when utilizing the 3-minute and the 30-minute alignment, I look to watch for higher time frame sweeps. In this example, we see that the 8:30 high swept out the 8 a.m. high, and so in order to validate a potential entry signature, I wanted to look for a smaller time frame breaker block and change in state of delivery to validate this as a valid sweep of the previous higher time frame high, being the 8 o'clock high, before then looking to go short. If we just zoom out on the chart here, NASDAQ was still very much so in a bearish trend, as we had pulled into the fair value gap, this large 30-minute fair value, and had rejected off of it. And so with the 8:30 high sweeping the 8 a.m. high within this hourly fair value gap, I could anticipate that price was going to pull lower into some internal draws, being draws like the 6 o'clock or the 7 o'clock low here. So let's actually break down the smaller time frame on the 3-minute to better understand how we can frame an entry utilizing this bias on the higher time frame. So on the 3-minute time frame, what do we notice here? Well, starting around the 8:18 window, we had the 8 o'clock high that was swept out by the 8 to 8:30 candle, and then what do we see happen here? Well, here we see we have the 8 o'clock candle that formed. We then have the high, which was formed here at the 8:27, which then the formation of the new 30-minute, being the 8:30 to 9 o'clock candle, swept out the high here. And what did we form that was significant in first giving me some type of a bearish bias in this trade? Well, we actually did inverse a fair value gap on the 3-minute time frame, which I'll mark out here as our IFVG. This is an inversion fair value gap, which is the first cue for a very bearish signature, because we've now broken price from a bullish market structure into a bearish market structure shift. But as many of you know, this is not my entry model, and so how do I actually break down an entry within this trade? And here we see once we inverse the fair value, we retrace into it, but we also did form what? Well, this entire bullish move that led to the sweep of the 8 a.m. high during the 8:30 candle actually becomes your bearish change in state of delivery, which I'll mark here primarily as our CISD, since this was the original CISD, and because this is a bearish change in state of delivery, I'll be marking this red on the chart. So with this bullish candle body move that led to the 8:30 sweep of the 8 a.m. high, I want to wait to see a candle body closure on the aligning time frame, being the 3-minute, in order to validate a short signature. What else did I notice about this trade that gave me even more bearish bias in this trade? Well, in this handy dandy portion here, we did see a bearish breaker block form as well. And so with my model, as many of you know, when I look to take an entry on my model, I'm looking to see a closure below both a breaker as well as a change in state of delivery, meaning a candle body closure below the low of the CISD as well as the low of the bearish breaker block. And here we see that we closed below the inversion fair value gap, which gives me the first sign of a potential bearish signature in market. And so now in order for me to validate an entry signature, I'm waiting to see a candle body closure on the 3-minute below the CISD and breaker block. So now let's play out this recap and see how this trade plays out. Here we see on the following 3-minute candle, which happens to be the 8:54 a.m., we see a very aggressive 3-minute closure that closed both below the CISD and the breaker block here. So let's actually enter this trade now, and I can better help you guys understand how this trade played out. So with my position now entered, because once I see the candle body closure, I typically just grab a market order entry upon the closure below the CISD and breaker. Where do I now manage my stop and put my take profit? Well, here, as we know, I took a market order entry on the closure below both the CISD and the breaker, and typically what I do is I look to see where the top of the breaker is, and I move my stop about 2 points above. So at 13.25 for the stop, I move my stop to a 15.25 on this trade. Next, as you guys know, I always shoot for about a 2R on this position, which you'll see conveniently lines up with what? Already marked out on the chart. It conveniently lines up with the short-term internal low here that was formed at the 6:12 a.m. candle, being the price level of 25,742.50. So with this trade now in place, we want to move our stop loss to the intended stop zone, and then move my TP to my 2R in this position. So we'll confirm this trade now, and let's now let this play out to see what exactly happens and whether whether or not this trade actually gives us the play we were looking for. So here with the following 3-minute candle, we see a very bearish structure form with a continuation signature on the 3-minute with this bearish closure. We then see a retrace back to our break even before we then see a very aggressive closure, which was the start of the 9 o'clock. This was the 9 o'clock, and then we had the 9:03 candle, which led to a very aggressive bearish signature, taking us out of the trade for a whopping 2R or about 31.5 points. This was a fantastic short signature, and it all started with the 8:30 sweep of the 8 a.m. low, which then led to a breaker and CISD confirmation, giving me an entry for my trading model. This then in turn, we put our stop about 2 points above the breaker, and then our TP at around 2R. You can shoot for about a 1.5 to 2R, either works, but I typically shoot for 2R, especially when we have an inversion fair value gap paired in with a breaker, a change in state of delivery, and an aggressive closure below. So with this closure now, let's actually break down how we could have potentially taken a continuation. So for those of you that might have missed the original C2 trade that I have mapped out here, let's now continue this replay to see how we could potentially take a continuation trade off of this setup. So if we just let this play out, what exactly do we notice is forming? Well, because we have such aggressive price moving on the 3-minute, we form another fair value gap here. But where is there any relevance in this market? Here we see we form another relevant fair value with the 3-minute forming. And so with this fair value in place, I'm going to mark out this fair value gap. And so here is the start of a new 30-minute candle, because the previous 30-minute candle was the 8:30 to 9 o'clock, and the 9 o'clock now signals the start of a new 30-minute candle. So in this position, the 9 o'clock now becomes your candle 3. And so if you're looking to take a continuation signature, you always want to follow the following 30-minute candle, being candle 3 in this example, or the 9 a.m. to the 9:30 a.m. window. So here we formed a fair value gap, and so if I'm looking to see a continuation signature, I typically want to see price retrace into the fair value, create some type of an internal protected high, and validate it by validating an internal change in state of delivery, validating the internal protected high, and then we take a market entry and put our stop at that internal protected high. So let's see whether or not this plays out, and if it does, we'll break down this continuation for this trade setup. Here we see the following 3-minute candle traces into the fair value, but because we did not get a candle body closure above the fair value, this does not invalidate this trade setup at all. And now let's play out the next 3 minutes. Here we see that the following 3-minute candle closes back below the fair value, showcasing that we are indeed validating this fair value as a valid potential continuation signature. But in order to validate this as a continuation, we want to once again see a closure below our internal change in state of delivery, which I'll mark here as our IC, and I'll put a red line because we are in a bearish trade. So in order to signal an entry, I would like to see a candle body closure below on the 3-minute time frame, and then take a market entry and anticipate price to pull lower. Also, for some more relevant information, it's always good to see where your potential draws on liquidity lie, and so we'll zoom out to see where we can potentially see some draws lie. And here we see at the 3 a.m. low, the 3 a.m. low as well as this 3:50 a.m., almost the 4 a.m. low here, become two relevant draws on liquidity, but the major draw that I'm looking for the session today would be the London 3 a.m. low that I have marked here as our DOL. So let's now see whether or not we get a confirmed entry on this IC, and once we see a closure below, let's take that market entry. We see the following 3-minute retraces into the fair value, respects the fair value gap again with no closure above. We then see a tap into our internal change in state of delivery, giving us a closer validation for this trade working out. And then finally here we see the 3-minute time frame closes below the IC, giving us once again an order entry. So let's now enter the trade and break down this continuation. So with the trade now entered once again, what did I mention? Well, with continuations, typically after a very aggressive bearish move, I don't typically shoot for 2R, since 2R is quite an extended draw when you have already seen market move aggressively in your intended direction. So for continuations, I shoot for around 1.5 to 1.8R. Most of the time I shoot for a 1.5R. So with this position entered, we have a market order entry on the closure. And then now where does our internal protected high lie? Well, our internal protected high lies at where the POI was respected, which is the two bullish candlesticks that respected this fair value and did not close above. And so when we manage our stop, we put our stop at the internal protected high, which aligns well with the top of our fair value gap. And then now we can extend to about a 1.5R or our maximum draw on liquidity. But for this video, we'll put some partials at the 1.5R here, and then we'll move the rest to our maximum draw that lies at the 25,630 window. We'll mark this as an X, which is where we'll be taking partials. We now move our stop stop to the intended stop area, and then we move our TP to the maximum draw on liquidity, with of course some partials being taken at the 1.5 hour window. So once we see a closure below the 1.5 R2, if you are in a multi-contract position, typically around the 1.5 R, and see a more extended draw, such as this 3M low, you can wait for the 1.5 R, see a closure at the 1.5 R, and move your stop to break even to then manage a risk-free position. So let's play this out candle for candle once again to see what happens with this internal change in state of delivery validation. Here we see we get a very aggressive bearish closure that retraced into the IC and then continued with a 3-minute bearish closure below. We see another one tapping us nearly out at our draw on liquidity here, so some partials could have been taken at the 1.5 R, but still no closure below. This does not validate a exit signature for myself or a break even on this position, since I'm looking for a candle body closure below. We then see that on the following candle, which happens to be the 9:33, aka 3 minutes after the New York AM session opened, we then validated a complete 2.3 R on this trade, taking the position for a full 67.2 points or a 2.32 R. And so if we had entered on the original C2 and had taken the original C2 trade, the original C2 trade would have been a whopping 9.49 R or 144.75 points. So all in all, this is an A+ entry model for Le Modèle. So just to recap once again, we saw an 8:30 sweep of the 8 AM high. We formed an inversion fair value gap, giving me my first bearish bias into the session. We then saw a candle body closure below the breaker and the change in state of delivery, which validates my entry model on the 3-minute time frame, aligning with the 30. We then mapped out our two major draws on liquidity, with the first trade mapping 2R to our internal draw at the 6:12 AM low. We then formulated a continuation signature where we retraced into a 3-minute fair value gap, respected it with a closure below the internal change in state of delivery, and then took it to our maximum draw, being the 3 AM low, aka the London session low. So this by all means was an A+ entry signature for Le Modèle, and definitely a trade I would take 100 times out of 100. Whether or not probability were to take me out, we saw a clean C2 signature as well as a beautiful C3 continuation for this trade. But anyways, hope you guys enjoyed this video. If you do enjoy this video, feel free to like and subscribe for more videos just like this, and I will see you all in the very next one. Bye now.